All right. Quickly, can you just run me through what your key market highlights for the week are?
Okay, in the fixed income space, the market opened on a quiet note, and the market in the first four trading days of the week, the market was bearish due to system illiquidity, and we saw a lot of market participants selling off to create liquidity. And then on Thursday, there was an OMO bond, and when we saw the stop rates for the short and medium term inch up by 25 basis points, while at the long end it also inched up by 50 basis points. And also due to the sell-off that was experienced in the fixed income market, we also saw yields inch up marginally. But surprisingly today, there was speculations that there was a Paris Club injection in the system, and also the retail refund that was pumped into the system yesterday, which injected liquidity in the market, and that actually made the market to witness a bearish run today. A bullish run. Okay,
so the uptick in rate, do you think this will continue?
Yes, going into the new week, if FAC is also paid, we'll see the system, the market, additional liquidity in the system, and then the bullish trend that we've seen today will extend into the new week. And also in the new week, on Thursday next week, there's NTB, there's Treasury bills maturity that will lose about over 500 billion. That will also inject additional liquidity in the system, and we'll see a liquid market next week.
How do you think that would impact the yields in the Treasury bill space then?
The yields will actually trade maybe slightly lower, but we believe that the range that it is now, it will extend into the new week.
Okay, so a quick one on the I&E window. Let's talk about the activity that we saw in that space this week.
Okay, in the I&E window for the past 3 months, we've noticed that the rates have been relatively stable between 360, 365. And yesterday it closed at 363.5. So we believe that with the CBN intervening weekly and then demand being met, we believe that the rates will still remain relatively stable within this range.
Okay, moving on to bonds now. So what do you see bond yield settling at next week?
Bonds have been relatively quiet. And then it's only when maybe there's an order, that's when we actually see like an activity in that space. So into the new week, we'll see relative activity in that space.
Okay, I'm sure you've been following the medium-term expenditure framework that has been out there. We're seeing the government is projecting inflation of 9.9% for next year. What do you make of this, and how do you see things impacting things in the fixed income and in fixed income markets?
If the government, sorry, I didn't get
so
that.
Inflation rate, the government is projecting inflation at 9.9% for next year in the assumptions from the medium-term expenditure framework and fiscal strategy paper.
Okay, into the election, we believe that in the fixed income space, going into the elections, there will be a kind of sell-off. So the rates for the treasury bills might inch up, will inch up or will remain within maybe around 15%. But after then, inflation may actually calm down a bit, because after the elections, there will be kind of stability in the system, and then activities will go on as usual.
Okay, going into next week, what do you think are the major flashpoints to look out for the fixed income and FX markets?
For the FX markets, we'll continue seeing that same range, maybe 363, 365 or 364 levels, and then the fixed income market, due to the high liquidity we will see in the system, the market may be a little bit will be bullish.